the order book. And this is primarily because a large number of turnkey orders which are higher value, like the railway orders of the electrification, etc., which were given to the PSUs few years back, and where we started working, and which are now reaching gradually their completion. So in terms of values, that shows it's a higher percentage. But if you see if you break down the numbers and if you go down and see the fresh orders which are coming, for example, as I mentioned, in Q3 we have got 100 plus orders totaling to 600 plus crores. The percentage of competitive versus nomination would be a wide skew from this. In fact, it is roughly about 2/3, 1/3 is the breakup in Q3. So it is ranging from, if the trend has been in every passing quarter moving more and more from the nomination to competitive basis. It's about Q2, it was around about 50% 50 to 60%, and every quarter it is moving forward, becoming more and more on competition basis.
Got it. Fair point. Got it, sir. Thank you.
Thank you. Our next question is from the line of Yash Gupta from Think Aside Advisor. Please go ahead.
Sir, one question on this India, Middle East, Europe corridor. Have we started doing anything on it? Any work on it?
Yes. So this is a very interesting opportunity for us, and we've been associated in making various plans and the possible opportunities. These are early days, but yes, we have been constantly associated with this, and we continue to be associated with this as this pans out in the coming years. So this is our area of strength. We have our expertise in this, both in terms of the location surveys, the alignment surveys, the designs, the rolling stock design, the port augmentation, the feeder route augmentation. So while we are associated with it closely, we will continue to capitalize on this in the coming years as this catches up speed.
But we don't expect anything in FY25, maybe 26 or 27 only.
I wouldn't like to speculate. It may not be correct for me to speculate. Let's see at what pace it moves. What I can only say that we have the wherewithal, and we are already closely associated in all aspects of it, whether it is the rail infra, whether it is the port augmentation, whether it is the logistic infra, whether it is the design or other consultancy. So as it moves forward, we would continue to capitalize on its growth.
Okay, thank you.
Thank you. Our next question is from the line of Rohit Maheshwari from Tata AIG. Please go ahead.
Thanks, sir, for the opportunity. First question is related to from your export order book, what you have in hand. It seems that for the next 2 quarters, your execution to export orders will be very low, and then second half onwards, it will pick up significantly. Yes, so my understanding is correct?
Yes, very correct. In fact, as I mentioned some time back, the locomotives take a longer lead time to generate revenue, get manufactured, and revenue realization happens when these are exported out from the ports. So that comes in one go. If one locomotive is exported, the entire amount comes the day it is, the bill of lading is made at the port. So while you're correct that these will start generating revenue by latter part of the FY, the other one is where we are the coaches, Bangladesh one, where we are L1. We are hoping that it matures into a finite order soon in the coming weeks. And since coaches have a lesser lead time compared to locomotives, they would start maybe generating revenue a little earlier than the locomotives. But yes, next 2 to 3 quarters, they would not be able to generate revenue, and then they'll suddenly start generating revenue together, maybe by latter part of the FY.
Okay. Now, related to this only, then I guess for the next 2 or 3 quarters, there will be some pressure on the margin side, correct? So because export orders will be low, So there will be some 100 or 200 basis point impact on the margin for next 2 or 3 quarters.
Yes, for sure, because the exports is a good margin stream of revenue in our blended 4 streams of revenue. So yes, if you look at it in the next 1 or 2 quarters, as you correctly said, the contribution from this stream of revenue would be low. So yes, there will be, from this aspect, there will be definitely a pressure on the margins. But while I said efforts will be, which we have seen in the sequentially also, to maximize the project consultancy revenue, which is also a good stream of revenue. So to that extent, we have been able to minimize the impact. Q2 to Q3, the project consultancy revenue grew, and that's why, in spite of generally sequentially Q1, Q2, Q3, we could even still come back with a 2% growth in the EBITDA margins in Q3. So to that extent, yes, there will be a pressure, but efforts will be to blunt that pressure to the extent possible by project consultancy revenue.
Okay. My last question is related
to... Sorry to interrupt. Please
thank you.
Your question. Okay.
Yeah, thank you.
Ladies and gentlemen, please limit your question to 1 per participant. Should have a follow-up questions, we request you to rejoin the queue. Our next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yes, sir. This is regarding REMCL. Can you explain, there's a line in the REMCL report which says your company has facilitated executing PPA worth 5,111 megawatt, out of which 136 megawatt is operational and remaining should start by FY 23-24 and target to be completed by 25-26. So can you please explain this? Is it possible? I couldn't understand this. What's the model there?
No, this is basically the RTC tender which we had floated, and as these are split between different parties, and the power purchase agreement gets signed between the various parties. So they are in the process of one by one getting signed. That was the basic, the amplification in that.
So what is the basic model of REMCL? Can you just give some color on that? How do we make money in this?
So basically, RMCL, see, the main role of RMCL when it was formed was to procure the traction power for Indian Railways, and that is a very important exercise, because to be able to procure and balance the power requirements, so that the traction energy requirements, so that you spend the minimum and end up as less on spot purchase. That is so that we have a control center at our RNCL office which tracks the demand across the Indian Railways, and from where it can source and do the power balancing and optimize the purchase cost. So as a consultant, RMCL works as the consultant for procuring power for Indian Railways across Indian Railways, the various zones. And it gets a consultancy fee as a percentage of the total power procurement. So as the electrification grows up, or as the traffic grows and there is more and more demand by the Indian Railways, the revenue, which is a percentage of that as a consultancy fee, grows. So that's the basic model of RMCL. Further to that, a few years back with the Net Zero initiative, RMCL was given the diktat of being the key nodal agency for implementing the Net Zero initiative of Indian Railways. So now RMCL has been floating various renewable tenders on a developer mode, and for doing that work, it also gets some consultancy fee.
So and the same thing, when we go from 136 megawatt to 5,111 megawatt, what will be our size of revenue and opportunity in this?
No. That you see, we have floated the contract, we have finalized the contract, and we have got the consultancy fee for it. And that's just, this is just an information that these contracts are getting in place.
Okay. Thank you.
And the power will switch from the sourcing will switch gradually in line with the vision of being net zero will from the conventional source of traction energy to these renewable sources of energy.
Thank you. Our next question is from the line of Rohit Natarajan from NTQ. Please go ahead.
Thank you for the follow-up, sir. If I can, sir, if you could just help us understand what is the total addressable market in exports for countries like Africa, in LATAM, South Asia. Where I'm coming from is essentially trying to understand what is your conversion ratio within that total addressable market.
So to give you a rough insight into what you're trying to assess, you see, Africa itself, there are 11 countries which are in a unique gauge called Cape gauge. This is unique to these 11 countries, which is 1067 mm, which is somewhere greater, a little bigger than the meter gauge. Now, when we, about 4 years back, we designed, we were the pioneers in designing high horsepower locomotives, push-pull DMU coaches, as well as state-of-the-art AC and non-AC coaches for them for Mozambique on the Cape gauge. Now, because of this, we have got interest from all these 11 countries. The scope, whether it is in coaches, locomotives or wagons or DMU push-pull trains, is tremendous across all these 11 countries. However, each one of them has funding issues. Some of them are trying to get a line of credit from India. Some of them are trying to source funding from their own sources or African Development Bank and other multilateral funding agencies. So it's to give one figure, one ballpark figure of the size of the market, even these 11 countries, it is very difficult to come at one figure, but the scope is enormous and it is more dependent on their funding mechanism. So while we keep trying to help them in forging out the funding mechanism, more and more as they get their funding mechanisms in place, we are the preferred choice for them. Similarly for the immediate neighbors, whether it is Bangladesh or Sri Lanka, because both are in broad gauge, we have been exporting to them, and in this tender we became L1 through a global tender. As they get more and more funding in place, their requirement is huge. Sri Lanka is wanting to revive back in a big way. The requirement is huge, whether it is in coaches, wagons, locomotives. They are looking for the ideal funding mechanism so that then we can supply them these rolling stock. So the market availability is huge. It is more dependent on them getting their funding mechanisms in place.
Just to follow up on that, sir, if we have to gauge what is the funding potential of maybe all these countries, what barometer or what parameters should we be tracking?
You see, each of these countries have a different appetite for taking loans. The strength of their economy and their creditworthiness decides the loan which they get from any of the funding agencies, whether it is the ADB, EIB, or the Indian line of credit. So it varies from country to country, and that's the constant exercise which these countries look for and take our support also and advice on what are their possible size of the funding which they can get.
Got it, sir. I really appreciate that. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Harshit Kapadia from Elara Securities Limited. Please go ahead.
Thank you, and thanks for the opportunity, sir. Just one question from my side. If you look at your Q3 results, when we look at on a quarter-on-quarter basis, there has been an improvement. Would it be right to say that this is a quarter that we will have hit the bottom and we will not see on a quarter-on-quarter basis decline decline or we have hit the bottom, both in terms of growth, revenue, as well as in terms of margins? If any color would be helpful.
Yes, Harshit. So if you compare YOY moving forward also, it may not always be a fair comparison because of the goalpost and being slightly different in terms of contribution from two very large streams and high margin streams, which were the export and the inspection business. So, however, having said that, the sequentially, if you even see this FY, Q1 onwards up till Q3, in all parameters, there's been a steady uptick in line with our strategy at the beginning of the FY. And to my mind and our assessment, we will continue to push this moving forward even in Q4 so that we keep consolidating our position and our push so that on an FY basis, we come as close as possible to the FY 22-23. And then building up on these orders and the revenue realization in the coming FY, will be a fairer comparison vis-a-vis baseline of 22-23.
Fair enough, sir. And just one final question follow up on this. What would be the consultancy revenue ex of your quality assurance business, sir?
So the consultancy revenue has seen a YOY growth of 21%, and it has seen a sequential growth also of 5%, the project consultancy revenue. While it not be fair for me to break down the further because it takes down the total consultancy revenue as a whole, but I can only add color to the fact that in spite of this hit of about 4 quarters back in the inspection business, where we became one of the 4 entities to be awarded the inspection business, which took a hit of about with the rates also going down, about 20% hit on the top and bottom line from this stream of revenue. We have been able to stand ground and diversify our other clients. And on a steady basis, on all 3 quarters, we are close to levels of the inspection stream which we were hitherto earlier before this sector opened up. So the impact has been able to be nullified to an extent possible. We are down by 20-25% in the inspection stream of revenue from the earlier levels. And as per our target, which we were aiming for, we should be able to come back to those levels in about 2 quarters' time.
Very nice to hear that, and wishing you all the best. Thank you.
Thank you. Our next question is from the line of Vishal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity once again. Sir, I think you did touch upon the previous participant question that you will come back to the same level what it was 2 quarters back for the consultancy. So that was on the margin front you mentioned, or on which side you mentioned, sir?
No, I said on the inspection portion of the consultancy business. You see, project consultancy business has been seeing a steady growth, and which has been our push to be able to blunt the impact of the export and inspection. So project consultancy has seen a growth YOY of 20% plus. Even sequentially, it has seen a growth of 5% plus, even with a high baseline. So the inspection stream of revenue, which contributes to my total consultancy pie, that was the one which has taken a hit. It used to be in the range of about 2/3, 1/3 in terms of the railways as a client and other clients about 1/3, which in the last 3 quarters we have made attempts and got a number of orders across other non-IR clients, and that contribution will start coming up, and we are aiming that in about 2 to 3 quarters maximum, our inspection stream of revenue should aim to come back at the levels it was prior to it opening up. Yes, in terms of the margin in the inspection stream, now with all of these coming on a competitive basis, it will definitely be difficult to maintain those level of margin. So the first immediate milestone is to first come back to those levels of revenue and then further grow in that, so that at least the actual contribution in EBITDA from the inspection stream comes back to the earlier levels. So to give you an example, most recently we've got a good order of about 16 crores plus for our inspection vertical, where from the GEM marketplace. So we are doing the inspection and the vendor verification services are about 14 plus crores. We've got an order from the GEM vertical. So this is a very unique and a very good breakthrough for us. And we'll build up on this to get many such similar orders.
Okay. So then, sir, this last 2 quarters, we are seeing that at a EBIT level, consultancy margin has been quite a range bound at 44% and 44.5% at a EBIT margin, consultancy. So can we say that probably like whatever the impact has to happen, say for opening up of the sector, competition, the margins are reflecting, and then probably this is kind of bottom on the margin for consultancy. Can we say that, or do you still think, yet to get more clarity as the quarter comes?
You see, the consultancy pie has contribution from about 13 different streams of revenue. Inspection is one of them. So whether it is the building, highway, metro, rail infra, airport, port, across these sectors, as I mentioned some time back when I was answering that question about the nomination versus the competitive basis, in this quarter itself, our fresh orders of 100 plus orders which you've got, at least 50% plus, in the range of about 50 to 60% are on the competition basis, both domestic and international. So, as all clients, whether these are the ministries or the state governments or private clients, they are all opening up to the competitive mode. The margins, even at the range of about 40 to 42%, are difficult to secure at those levels moving forward, because each one of these 13 contributors to the consultancy revenue are taking a strong challenge in terms of margins. So the while margin percentage will definitely be tough to ensure, what the aim is that you get more and more orders. As you see, there's a healthy growth in our consultancy order book itself, so that in absolute contributions in the EBITDA and profit, we are able to have a steady growth.
Okay. So then these new orders that we are getting, what margins or probably any range that you can provide, sir?
Well, these are different across sectors. It will be again unfair and give a wrong picture if I give you one figure. There will be a different margin in areas of conventional consultancy like highways, where there are much tougher competition. Then there are areas, there are more skilled higher skill sets and tougher and lesser, or I would say not lesser, but there are lesser players or bigger players where whether it's the metro sector or the airport sector or the tunnel engineering sector, bridge engineering sector. So there the margin is slightly better. So every vertical has a different range of margins depending on the competition and the players involved.
Okay. Sure, sir. Thanks a lot for the detailed explanation. Thank you very much.
Thank you. Our next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yes, sir. Thank you for the opportunity again. Sir, my question is, what is the timeline of the execution timeline for the export orders? Will it be 1 year or 2 years? Like, what is the total timeline? If you could give some color on that.
So, Viraj, normally locomotives take a longer period of time, and as I mentioned, the revenue realization happens at one go. There are unfortunately no intermediate milestones where we can recognize the revenue. The revenue comes in one go when these are shipped out and the bill of lading is made at the port. So, and normally it is not that one or two normally they don't take sets of one locomotive. So normally minimum of 2 to 3 locomotives or more when they get manufactured, then a vessel is arranged and the revenue realization happens. So locomotives are the longest lead time, anything ranging from beginning from 12 to 14 months to ending in about 16 to 18 months. The coaches are much faster to manufacture, and so once the Bangladesh order is in place, and we actually start the manufacturing process, to my mind, they have a faster lead time, and they can start from anything from about 6 to 9 months time approximately.
Okay. So the coaches is like when they're delivered and then it can be delivered in batches and we can get the payment. Is this the way it works, is it?
Yes. Even for all export orders, whether it is coaches, locomotives, wagons, etc. So even for coaches, so suppose these are 200 coaches, the order. Normally again they would be dispatched in lots of maybe 20-30 coaches. The first set of, as soon as 20-30 coaches are ready to be shipped, they will be shipped, and at least to that extent that on that particular day the revenue realization will happen. So while there is a lead time, the revenue happens on one particular day for one set which is exported.
Oh, so the revenue will come in one particular quarter in a bulk. That's how it works, right?
Yes.
That's a correct way to think. Okay.
Yes,
Thank
there is
you.
no intermediate milestone for the revenue realization. It only happens when one sets of, say, 20-30 coaches or 2 or 3 locomotives are exported.
Okay. Thank you, Alok. Thanks a lot, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to Mr. Harshit Kapadia for closing comments.
Thank you. We would like to thank Shri Rahul Mittal, Chairman and Managing Director, Shri A.K. Singh, Director Projects, Shri Deepak Tripathi, Director Technical, and Shri K.G. Agarwal, Director Finance, for giving us an opportunity to host this call. We also would like to thank all investors and analysts for joining for this call. Any closing remarks, Rahul sir?
Yes, I just wanted to reiterate our strong commitment in the direction we are moving. We are proud to have touched some milestones in this quarter. We were declared the Navratna status. We have got 2 very important awards from the Chartered Accountant Association of India for good governance. We've got a Scope Award for good governance and institutional excellence. We were proud to be having made the Ayodhya Dham station, which was inaugurated most recently by the Honorable Prime Minister, and the milestone of having received, of having become a 1 order a day company, a dream becoming true in this quarter. So with all those, in spite of the various challenges which we have discussed, we are very confident that the movement is aggressively in the right direction, and we will continue to build up on this base and consolidate our position.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.